Hello traders, Gary Wagner here, just about 1 o'clock in Honolulu, 7 o'clock in New York. It is Wednesday, August the 12th, 2020, and this is the daily report for gold and silver. After yesterday's dramatic decline, the real question was, would we see follow through or some kind of support coming in the market, although I would have thought that to be unusual. However, the market actually opened up higher in both gold and silver, but as it went through the trading day in New York, it did close lower, sharply lower. On today's show, we'll talk about price points that we want to look at as potential levels for the correction to conclude. But I do have an announcement. On the members page, you will see a link, and that link will allow you to register for free to tomorrow's podcast, 3:30 Eastern Standard Time. I hope to see you there. Again, look on the members page for the link, and let's take a look at current pricing. Traders, I was very surprised when upon opening in New York today, we actually saw gold and silver prices firming. After today's incredible and strong decline, I expected some sort of follow-through selling. That, in fact, is what we got. However, that occurred after the prices had traded higher and then moved back into negative territory. As you can see, December gold at 1926.20. That is a further decline of about 1% or $20 on the day. The opposite in spot. Spot gold closed up $4.07 at 1915.40. Silver had a pretty dramatic decline, 44 cents. Nothing like the decline we witnessed yesterday of 15%, but 1.7% for silver is a large decline if it is not being compared to the extreme drawdown of yesterday's action, $25.60. And that was all within light of tailwinds provided by some weakness from the US dollar. The GLD right now, that lost about 0.5% in trading at 197.10. And SLV, the Silver Trust, that gained fractionally on the day, closing at 23.42, up about 0.4%. Let's take a look at our charts, our technical studies, and talk about some critical factors. First, where do we think this correction could end? And more importantly, once it does end, what is the upside potential for both gold and silver pricing? Traders, yesterday's sharp decline answered the question as to when we would see gold and silver pricing correct and retrace. We now know that that began really last week, but accelerated in trading yesterday with gold losing about $117. We, of course, exited our long futures trade on the prior week at 2037, and although it traded a couple of dollars higher than that after that, I am certainly happy that we took the incentive to exit the trade last week. Yesterday, we pulled profits on silver. We also pulled profits on GLD and SLV. With that in mind, let's talk about where we think the market could go and what our next set of moves are going to be. The first thing we need to do is to calculate where this correction could inevitably take gold pricing. And I've marked 3 logical spots, and these are based upon a Fibonacci retracement. First is the 23% retracement level at 944, then 1849, that is the 38% retracement, and as deep as I think this could go, even though it could go to 61, I'm shooting at 50% retracement as really the core level that we won't see it break below. Why is that? The primary reason is when we look at historical data in this area, what we see is a band of pricing really clustered right at this area where that price point in particular is absolutely showing us that that was an area of resistance. Of course, once we broke above that price point in the middle of July, that all changed because that then became support. So that would be the lowest I would look at. Now, what is interesting is that earlier today we actually saw pricing above, slightly above, the 23% retracement. Now, currently we're looking at 1930, 1929, so we are a good $16 below that. That being said, if we see a continuation in selling, I'm going to look at if it goes to $1,849, and if so, if we see any tentative support come into the area. Because what I'm most excited about right now is the opportunity for those who just got out of profitable trades to re-enter and have another opportunity to profit once again. But more importantly, to our new subscribers that got in as we were involved in the trade, we'll provide them with a good entry point for their first trade with us. For right now, my recommendation is to maintain our neutral stance in gold, in Forex gold, as well as GLD. The other primary market that I do want to cover today is silver, and that is also in a defined correction. And so we want to ascertain where we believe the correction could conclude. We could find support and look to initiate a long position. Now, unlike gold, which went to new all-time record highs, silver did not. But more impressive than gold, we saw silver in essence triple in pricing since mid-March of this year. It was below $12, one of the most dynamic moves I have seen in the precious white metal when gold wasn't running in tandem and running far ahead of it. Now, here's what we're looking at. The Fib retracement goes back to these lows just below $12, up to the most recent highs, which is roughly $30, $29.89. The first level that we would look at, of course, has got to be $25.74, and that's based on the 23% retracement level. Currently, we do have silver down about 19 cents at $25.77, and what that means is it is just a few ticks above this key level at 23%. That's a small green candle here. Now, what is also extremely noteworthy is the intraday low achieved in silver today. When we look, we can see that that came in just above the 38% retracement that resides at $23, we'll call it, with this low just at about $23.45, so very, very close. You will also note that besides the Fibonacci retracement, we also have an extension, and the extension is looking to forecast where we believe the final leg of the rally, wave 5, could go after this correction concludes. Now, in terms of the data set, what we're looking at is, call it 1700 up to 2990, and then we begin our extension really at the conclusion of this wave 4 that we're forecasting is going to come in at around 2342. The 0.618% extension takes us to about $31.42, while the 78% extension takes you to around $33.50. That is my most conservative upside target for where silver will go after the correction concludes. On tomorrow's show, we'll look at a couple of models for where we're forecasting gold to go to. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.